Today, in this video, we'll discuss about various aspects of Fintech company and its legal requirements and compliances. So starting with the meaning of Fintech company. What is Fintech company? Financial technology is a company that seeks to improve and automate the delivery and the use of financial services. Fintech is utilized to help companies, business owners, and consumers in order to manage their financial operations, processes, and lives by utilizing specialized software and algorithms that are used on computers and increasingly smartphones. There are 4 types of services which a Fintech company generally provides. These are payment services in the form of e-wallets and mobile payments. Next is peer-to-peer lending services. After this comes the consumer to business and business to customer retail banking services. And last one is personal finance and investment advisory services. Having discussed about the meaning and types of Fintech company, we now come to the legal requirements. So the legal requirements and formalities for a startup that wants to set up a Fintech business in India are: firstly, decide the business structure. The first step to start an online finance business is to decide the fitting business structure. There are 3 types of business structure suitable for a Fintech company. It is one person company. OPC is a combination of sole proprietorship and company, where the businesses has only one owner and function as a company. Then limited liability partnership. LLP is combination of partnership and corporation, where all the partners have limited liability restricted only to their respective shares. And lastly, private limited company. Private limited company is a company where the directors and shareholders of the business have no personal liability to the creditors of the company, as it has its own rights and liabilities separate from the members. This is the most apt structure for a financial technology business in India. Next step is GST registration. An online finance business or a finance startup is required to register for GST and obtain GSTIN for the business. The GST regime has combined the all indirect taxes like service tax, excise duty, etc. Next one is to get legal contracts and agreements. To start an online finance business, it is also important to get the legal documents. A startup lawyer can assist you in drafting customized legal documents in accordance with your business requirement, such as co-founders agreement, intellectual property licensing agreement, privacy policy, website user policy, terms of use of mobile app user, vendor agreement, product development agreement, and employment agreements. After that, obtain the intellectual property rights. Intellectual property rights include trademark, copyright, patent, and design. An online finance business needs to protect its brand name, slogan, website, mobile app, etc. All this can be protected by registering them and obtaining intellectual property rights. Then we come to licensing under applicable law. Licensing and regulation of a finance startup depend upon the type of service it plans to provide. Service which can be provided by an online finance business include: for payment services, the Reserve Bank of India launched a differentiated banking license scheme for issuing on-tap license to businesses that want to start financial or banking services. For this, they can apply with RBI to register themselves. For P2P, they can act as intermediaries. For retail service providers, licensing to retail fintech to carry out lending and depositing services for micro, small and medium industries and unorganized sectors. For financial management and investment, there are no regulations for finance management businesses, but the RBI has proposed that this fintech would be registered as NBFCs, that is, non-banking financial companies. Last step is registration of domain. A tech company's basic requirement is having a web presence. Therefore, having a domain and fully developed website are main priorities for online finance business. A finance startup can also set up a mobile app to expand its subscribers and users. Now, once a fintech company is incorporated, the same is required to comply with certain regulations. With no definite set of rules for fintech services, it becomes difficult to drive regulatory landscape, but the policymakers realized it was mandatory to regulate the fintech sector in India. First regulation is Payment and Settlement System Act. This law is the principal legislation governing the payment regulation in India. This act prohibits the initiation and operation of any payment system in India without prior authorization of RBI. Payment structures include credit and debit card operations, smart card operations, money transfer and PPIs. Then guidelines regulated P2P lending platforms. Peer-to-peer lending platform directions of 2017 prescribe the lender exposure norms and borrowing limits concerning the operations of P2P lending platforms in India. Then is NCPR regulation under UPI payments. The UPI procedural guidelines issued by NCPR regulate the UPI payments in India. According to this framework, money transfer services through UPI platform have to be generated by the banks. Banks can engage technology providers to carry out the operation of mobile applications for UPI payments, but under eligibility criteria and prudential norms as prescribed by NCPI. After that, NBFC regulations. The Reserve Bank of India Act of 1934 governs all NBFCs. According to these regulations, any organization providing fintech services in India will have to be registered by the RBI. According to Section 45 of RBI Act, no NBFC can initiate or carry on the business of a non-banking financial institution without obtaining the certificate of registration from the RBI. Then, regulation governing payment banks. The payment bank thus operates as a bank but function on smaller scale. It cannot provide loans or issue credit cards. These banks are registered as private limited companies and licensed under Section 22 of Banking Regulations Act of 1949. Specific licensing conditions restricts the bank's activities, especially for acceptance of demand deposits and on payment and settlement. So, this was all about Fintech Company. In case you want to know more about Fintech Company, contact Rajput, Jain and Associates. Thank you.